Okay, so here it is. This is where it started. This is the lowest. This is the lowest low, and this is a 1, 2, 3, 4, and 5. For those of you that are familiar with Elliott wave, impulsive waves are made of 5 waves, and corrective waves are made of 3 waves, unless it's a long correction. Okay, so another thing to notice is that wave number 5 is truncated. This is a truncated 5. It never exceeded the high of 3. Okay, so here I wrote to myself, let correction play out, likely to go to 61.8 up to 78.6. Enter long after correction is over. So here I wrote to myself that it is likely for price to go down to about these levels, between 61.8 to 78.6. And as a note, it is possible, it is likely to end up somewhere on this Fibo fan line right here. Right here, look, the price had already respected this Fibo fan. Okay, and so right here is a likely place somewhere between these two. Okay, and then I wrote to myself, if correction is already over, for instance, if this happened to be the correction and this is already the one of the wave 1 of the next wave, and this is just a correction, which means that it will not go lower than this and it will keep on going up. Okay, so I would want to get in at this price. If correction is already over, enter at this price. I'm not really sure if this is the right count. This looks like the right count, but it is possibly not. This could be a 1, 2, 3. This could have been the very short 4, I'm not sure, and this could have been a 5. Yeah, and this is the correction. Now this is a very shallow correction. Once again, this is 38%, and my experience had showed me that more often than not, retracements go to 61.8 to 78.6. So it's more likely that the price will keep on going down, right? But I expected a correction. Yeah, if up move had begun, then we want to enter long at the end of current correction. So I placed here a buy stop order, just in case price exceeds price exceeds this high. I want to be in automatically, so this will get me in. Okay. So let's go now to the live charts and see what happened. Right. All right. So basically, the analysis was made right at this point right here, and price did. This was just the beginning of the correction. See, this is the Fibo retracement, and this here is 38.2. This here is between 38.2 and 50. Then it goes up. This little piece here is the retracement to this, and then it keeps on going down. A, B, and C, or A, B, and C. Either way, this appears to be the retracement right here. Price had come to between 61.8 to 78.6, very close to the 78.6, right on the dot, touching this Fibo fan line, the 78.6 Fibo fan line. Okay, and also very close to 161.8 percent of wave A. You see here is the expansion. This is the distance of wave A, and this is and wave C made 161.8 percent of wave A. Okay, so there is a very big cluster of indicators and of levels right here that suggest that price at least might stop here, very likely to just take off from here. Okay, so as soon as I saw this happening, price retraces here. I saw my signal on the RSI. You know, this is a trend line, or this is a weekly trend line, and it sort of compressed right here. It compressed on different time frames. On other time frames, like the 4 hours, it is very compressed. The 6 hours, it could have been more, but it also depends on how it will develop, because if it will take off from here, then the longer the time frame, the longer it takes the CCI to show me what I want to see. Yeah, but on the other time frames, like the 3 hours, it's compressed. 2 hours, it is somewhat compressed. 1 hour, compressed. See? And when I look at the 1 hour, by the way, I could see that this move up is impulsive, corrective for the first time. This is a corrective wave down and impulsive wave up. See, if I look at it on the 5 minutes, which I'm not going to, but if I was to, I would see that this is very impulsive and this is corrective, and then it takes off again right here, and this is where I entered, right here with a compulsive wave. I expect it to give me some correction, give me a 1, 2, 3, 4, and 5, then give another correction and take off from here. That's what I hope will happen, but still needs to be seen. Yeah, but these are when price hit this cluster, when price gave me this impulsive wave, impulsive up, corrective down, that's when I decided to just enter, and I have approximately 75 pips stop loss. If I wanted to, I could have just taken out 35% of my position right here and have zero risk, but I don't want to, because I'm quite certain that that price will go up. Okay, so well, you could never be too certain at the market, but this is a calculated risk that I think is well worth it. Okay, looking at once again at the daily, for example. Okay, let's look at the daily. Let's look at it on this right here on the weekly. Okay, so if this is the B right here, I'm a little bit lost. Aha. Okay, so this is the A. If this is the B right here, I expect the price to go somewhere here, which is 4,500 pips. Okay, 4,500 pips, and I'm risking 75 pips. It's well worth it. Even if I was wrong 3 times, 4 times, it's still well worth it, because I'm expecting this trade to go on for about a year, several months to a year, up to a year, you know, of just leaving this trade, let it run, making more entries along the way, but basically just letting it run. Okay, so this is my analysis for the Euro Yen. Look out for other videos for other pairs and other analysis, and feel free to check out my website. I wish you all great trading. Ciao.